Hi, welcome back to Elements in Focus. Aaron Rheaume, Director of Financial Planning, and as always, Grant Soliven. Grant, how are you today, man?
I'm awesome, brother. It is a nice, cool, crisp day, and we are together doing this. I love it.
Yeah, these are fun, and you and I, have a lot of fun doing these. We've been, I don't know, probably going on 4 years or so, and we just walked through our five critical elements. Those are your life after work, tax planning, which we're going to talk about today, and then all the way through legacy planning. So, Grant, one of the things that we get questions on are tax credits. Specifically, what is a tax credit and how can you leverage those? Before I tee you up for that, just if you're looking at tax credits, some of them can be very state specific. We are here in Indiana. We have families that we serve in over 30 states. So if you're watching this out of the state of Indiana, make sure if you're looking at different credits that you're looking at those state specific credits. So Grant, what is a tax credit and then how can you leverage some of those?
Absolutely, Aaron. Thanks for teaming me up on this. I love this topic in many ways because tax credits come to those who want to be generous to family and to charitable organizations. And here's what I mean by that. So we're used to taking tax deductions, right? It's a very comfortable term that we're all very familiar with. We know how it functions. Tax credits are a little bit different. And here's what I mean. A tax credit, if you can take it, is always more valuable because it is a return of the taxes you paid in some situations, dollar for dollar. Now, here's a great example to kind of loop in what Aaron just talked about with state-specific taxes. So in Indiana, if you put money into a college choice 529 plan, right, you will get up to a certain dollar amount, which is 7,500 for the year in which we're having this video made. You get 20% back, so $1,500 of tax credit. What that means is any tax credit, Indiana taxes you paid in that year in which you gave the donation to the 529 plan on behalf of a beneficiary individual going into K through 12 or college, university, or trade, then essentially you'll get $1,500 back up to the $7,500 gift, dollar for dollar taxes. So it's a refund of the taxes you paid. Now, why do I say Indiana specifically for the 529? Because not every state offers a credit. Some states offer nothing for you to put money into a 529 plan. Some states offer a tax deduction federally. So again, understanding the credits is really important. Another thing state specific to us in Indiana would be the attainable homeownership tax credit. I had to look over here on my screen to make sure I didn't miss it. And essentially what's happening is organizations like Habitat for Humanity, if you were to give to the organization, you get similar a tax credit, a dollar for dollar return of taxes paid on your tax return, which by far is a super powerful benefit relative to that of tax deduction, which only limits the amount of money you pay taxes on. It's not a full refund of those taxes. So credits are powerful. Leverage them. Find out what they are. And sometimes they can be sneaky. A lot of individuals don't know that the sustainable house homeownership tax credit can be given to Habitat for Humanity because a lot of people aren't used to giving to those. So if you're called to give, if you are called to use money for the education of others, etc., investigate your state-specific levers that you can pull in order to make these hum and sing. Aaron, is there anything that you want to add to this before we kind of lead our families to next questions?
Just kind of more of an example to wrap it up. So here in the state of Indiana, Grant did mention if you use the College Choice 529 plan and put a $7,500 contribution to it, you do get a 20% tax credit, which is $1,500. However, and I just want this to be clear, if you only owed the state of Indiana $1,000 in taxes, it's going to wipe away that $1,000. You're not going to get a $500 refund from the state of Indiana. So it only goes against taxes owed. Now, if you owed, 2,500, it would offset it dollar for dollar up to $1,500. So just be mindful when you're trying to make those contributions. If you're here in Indiana and you're making that 529 contribution, if you don't owe more than $1,500 in state taxes, then likely you're not getting the full benefit on that. So just pay attention to that. However, it's still a good idea if you need to contribute to the 529 plan. I've got three daughters, 16, soon to be 13 and 11. That 529 plan is very useful for us. Grant, thank you so much for sharing on the tax credits. If you have questions, if you want to know more, there are other credits outside of the two that were covered today. We'd be more than happy to walk you through those. Schedule your complimentary next steps meeting with any of the advisors on our team, 800-928-4001. If you have specific questions, send those to talktofeg@yourlifeafterwork.com, and we'll be more than happy to answer those for you. Have a blessed day, and thank you so much for watching Elements in Focus.